Hey everyone, in this video I'm going to bring you one growth stock that's down 60% off its high that I think makes an excellent purchase right now. So I'll go through what the growth stock is, the reasons why I like it, and why I think it makes an excellent investment right now. So let's get right into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, the growth stock that I'm talking about today in this video is Pinterest. Pinterest is down 60% off the highs reached in 2021. Although it's recovering nicely off the bottoms, I still think the company makes an excellent investment right now. And let's get into why I think that's the case. So the recent highlights: in the fourth quarter, the company grew revenue by 12% year over year to 981 million. In 2023, overall revenue increased by 9% year over year to 3 billion. So the fourth quarter revenue growth was better than the annual revenue growth, suggesting that revenue growth is accelerating. And in fact, when we look at the guidance a little bit later, you will notice that revenue growth is indeed accelerating. Global monthly active users increased by 11% to 498 million. This is the core of the business. This is what fuels the flywheel. The monthly active users, the more users on the platform, the more opportunity to show advertisements, and the better for Pinterest overall. Most importantly, GAAP net income of 201 million in Q4 was a much improvement from the 36 million loss in the same quarter in 2023. So the core categories in the company improving, heading in the right direction at a brisk pace. Getting into the details of the monthly active users, what you'll notice here is that monthly active users from the US and Canada increased by 2 million year over year to 97 million, up from 95 million, a 2% growth. And while you look at this and you say, well, that's modest, that's mediocre, the big thing about the US and Canada is this market is mostly saturated. Social media companies are finding it difficult to grow users from this region. We saw this from Snap and we saw it with Meta platforms. But Pinterest found success in its latest quarter in adding users in this region. That was critical because I'm going to also share with you the average revenue per user. You look at the average revenue per user from the US and Canada, it was $8.07 in the most recent quarter. That was up 6%. For the year, it was $25.52, which was up 5%. Look at all the other regions. In the Europe, the average revenue per user is just $1.23 in the latest quarter. In the rest of the world, it's just 15 cents. So users from the US and Canada are significantly more valuable to Pinterest than users from any other region. In fact, they are multiples more valuable, almost 8 times more valuable than users from Europe, and almost, 60 times more valuable than users from the rest of the world. So that's why social media companies and investors following social media companies focus on growth from the US and Canada and focus on that region as the primary region of focus for these social media companies. And Pinterest showed great increase in that region in the latest quarter comparably to rivals in the field. I mentioned we would look at guidance, and for first quarter 2024, the company expects revenue in the range of 690 to 705 million, representing 15 to 17% growth year over year. So that would be 16% growth at the midpoint for the first quarter, and that is accelerating from the previous quarter. Let's go back to the current quarter's results. So you notice 12% growth in the most recent quarter and then 9% growth in 2023. So you could see a steady uptick in revenue growth from Pinterest, and that's something that I like to see in companies I'm considering investing in. Not only are they growing, but that rate of growth is increasing. I like to see that from potential investments. Longer term, Pinterest has done a great job growing revenue, 3.055 billion in revenue, up from 800 million in the trailing 12-month period in 2019. So very nice revenue growth in the long term. Still, the company has a long runway for growth. The total addressable market for advertising is estimated to be between 900 billion $1 trillion in 2024. That's a massive opportunity, a massive market where Pinterest is still just a fraction of the overall market. So it's got a long runway for growth. Operating profit margin over the trailing 12 months at negative 4.11% was much better than its bottoms over here in 2020, where it was losing over 100% in operating profit margin. And if revenue grows as Pinterest expects it to, and given the fact that in the latest quarter it made that huge switch, remember I showed you net income was positive in the latest quarter compared to the loss in the same quarter the prior year. At that rate, I wouldn't be surprised if operating profit margin approaches positive 10% in 2024 by the end of 2024. Looking at longer term prospects for revenue growth in the current year 2024 for the full year, investors expect Pinterest to grow revenue by 17.4%, so faster than the next quarter, which is expected to grow at 16%. So investors on Wall Street are also expecting Pinterest to continue accelerating that rate of growth. And then for 2025, they're expecting 18.4%. So another modest uptick in the rate of growth and also a solid rate of growth as well, 18.4%. All things looking like they're heading in the right direction for Pinterest. And then you have its cash flow from operations to sales, which has improved very nicely all the way up to 20% in the latest trailing 12-month period, up from around negative 5% in 2019. And given the trends of growth over 2024 and 2025, I wouldn't be surprised if this metric continues working its way in the mid 20% range, perhaps even to 30% in 2025, given that the business itself is an asset-light business model, right? It's a platform that Pinterest puts out there and then users come join for free. The next incremental user doesn't cost Pinterest very much money. So that's a lucrative business model, one that we've seen what it can be at scale when you compare it to meta platforms at that large scale, just how lucrative it can be. So the potential is there here, given this business model, given that it's still in early days, it can grow to become even more profitable and even more positive in cash flow from operations to sales. And finally, the valuation is very attractive, trading at a forward price to earnings of 20.62. This is near the cheapest you've been able to buy Pinterest stock, going back all the way to 2021. And a forward PE of 20.62 is attractive given the company's characteristics in growth of sales and growth in earnings per share and growth in profitability. I like this valuation compared to those growth prospects and the long runway for growth ahead. The total addressable market is massive in the near 1 trillion mark. So all those reasons, I think Pinterest makes an excellent buy on the dip here at current valuations. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.